So behind me is a chart of Facebook, and as we approach earnings, two things are happening. Bullish traders see this trend bringing new highs for this stock, while others believe a pullback is imminent. Now, the same thing's going to happen with Apple, Amazon, Google, and Tesla as they all report earnings this week. What I want to show you is how to predict how far these moves are likely to occur after earnings. And we're going to do it using options. So let's get started. Hey everybody, Tom Gentile. Welcome to Tom's Trading Room. You know what we do here. We teach you how to spot opportunities and create alternative risk trades other than simply buying and holding stock. Do me a favor right now, if you've never done this before and you're seeing us for the first time, like this video. It helps support the channel. And if you've never subscribed before, hitting the subscribe button and dinging the bell will allow you to receive videos like this the instant they are uploaded. All right, so I want to show each and every one of you how you can use a simple option strategy to determine where a stock is likely to go right after its earnings are announced. So to do that, I need to get into my podcasting room and on my computer. So let's get to it. Okay, so before we begin this fantastic video today, I want to just mention this quick disclaimer. You can pause the video right now if you want to read this word for word. I'm just going to mention two quick things. Number one, as we all know, stock and options trading has large potential rewards, but also large potential risk. And number two, I'm not an investment advisor. I'm here to show you how it is that we spot high probability opportunities and trade them alternatively to simply buying the stock itself. All right, so the big thing that I want to mention as we go into this video is that, like I said last week, people trade earnings the wrong way. They focus on price prediction only, and they really look at it as a guess. And that guess typically comes from a lot of chatter that happens on mainstream media. All right, their timing is off. They trade through earnings. That's the riskiest time of all. But if you want to trade through earnings, if you want to get an idea of what the stock is going to do after earnings, I'm going to show you how you can use options to do that right now. And we're going to predict the stock moves, all right, get a predictive range of the stock using the rest of the FANG stocks, which are reporting this week. That's Facebook, Apple, Amazon, and Google, using a very, very simple way of doing this that almost nobody knows how to do, and it involves options. So let's push through. I'll show you what I'm talking about. Take a look at Facebook right now. It's trading right around, this is as of the beginning of the week, $305. Perfect. All right, what we want to do is we want to use this week's options, which expire after earnings. Earnings are in 2 days, so let's use this week's options. And what we're going to do, here's the Friday options right here. So I'm able to take a look at these Friday options, and I'm able to see that with 4 days to expiration, right? Just looking at the at-the-money calls and puts, I'm going to update them right now. If we come down, now take a look at where the 305s are. The 305 calls are $8.53, right? The 305 puts are $8.55. So this is roughly 17 points when you add the calls and the puts together. 17 points of what? Let's go back and look at the chart again. So if you take 17 points and add it to 305, and you subtract it from 305, that's the prediction of where Facebook is going to be, somewhere in that range after their earnings are announced. All right? Very simple. You just simply take the straddle, the at-the-money call and at-the-money put, add it to and subtract it from current price. Now, I'm going to look at current price the day before earnings, but I'm showing you this a couple days in advance. Let's take a look at Apple. Same thing. Apple has got earnings in 2 days. That's on the 28th. Apple's trading at just around 135, so we're going to look at the 135 calls and puts for Apple. And to do that, I'm just going to come up here and change my my symbol to AAPL. Let's update that. And we're looking at the options that expire this Friday. Let's scroll down. The 135 calls are at $2.79. We'll call that 280. The 135 puts are at 315. So if you take 280 and you take 315, that's almost 6. So we can round that. That becomes 6 points. 6 points above 135 and 6 points below 135. So this is basically telling me that Apple is likely to be in a range of around 141 on the high side to down around 129 on the low side. After earnings, it should hold that range. Should pop up if it's bullish, should pop up. If it's bearish, should pop down. But the option traders are telling us, based on the way the options are priced, that it's going to be in that particular range for the remainder of the week, at least for the day after earnings. All right, let's take a look at our next one. Next is Amazon. Symbol AMZN, trading around 33.50 right now. So let's go ahead and look at the 33.50 calls and puts for Amazon. Again, I'm going to come back up. I'm going to reset AMZN. Let's go ahead and update that price. And there we go. Let's scroll down. And now we're looking at the, and a lot of strikes here, the 33. Now, we're looking at the at-the-money calls and puts. And really, it looks like it's going to be 74.20. So almost 75 points for the 33.40s. And almost 75 points for the 33.40 puts. So 150. Take 75 for the calls, 75 for the puts, 150. So you take 150 off of 33.40 and you add 150 to 33.40. And what do you get? Let's go back and look at the price itself of Amazon. So we're really talking about somewhere around 3,500 on the high side, all right? And then somewhere around 3,200 on the low side. So that's the range that Amazon is looking at just prior to earnings into post-earnings. Let's take a look at Netflix has already reported, so our last FANG stock of this video is going to be Google. Google's trading just north of 2,300. Back to the option tables, and then we're going to go ahead and pump in GOOGL for Google. Let's update the Google chart. Let's take a look at what Google's at-the-money options are telling us. And if we come down to where the stock price is, there we go. The 2305s, all right? Roughly, I mean, 2305 is 51.30. 2305 puts 51.30, right down the middle. So we're really looking at about 102, roughly. $102, $103. So back to the chart. So if we look at $102 above, we're looking at something north of 2,400 and something south of 2,200. All right. So once again, to really kind of sum up what we've done here, if you just take a quick look and look at the summary, predicting stock moves post-earnings, that means right after the earnings are reported, requires pricing the at-the-money calls and the at-the-money puts with this week's expiration date. We just did that with Facebook, Apple, Amazon, and Google. Number 2, add both the price of the calls and puts together. And that becomes the probable move above and below the current stock price prior to the earnings. And then number 3, this is not going to guarantee a 100% probable outcome, but it does give you a great range for the stock to move post-earnings. Hey, thanks again for watching the video. 3 things for you. Number 1, for more information on how we trade like rules-based traders, check out the description below this video. I've got a lot of free stuff there for you. Number 2, like this video, please. It helps support the channel. And finally, if you subscribe to the video and ding the button next to it, you'll get the next one as soon as it's uploaded. Thanks again. We'll see you on the next video.